Let's bring on board Mr. Bhansali, CEO, Finance and Strategy and Business Development and CFO at Emami, joining in with us. Very good afternoon, Mr. Bhansali. Thank you so much for joining in with us. I want to talk about rural. That's what we and Anisha also want to eagerly know is, has rural started recovering? You managed to see those 8% volume growth. How much of that was rural? Any indication, green shoots, what are you seeing there?
In fact, the growth has come from all the channels, and it includes rural and the GT. So almost of 5% channel growth has come from the GT and rural both channels. So the growth is all through from all the channels, from new age channels, GT, rural channels. So it's an all-round growth.
Growth coming in because of course you have your Navratna portfolio which has done quite well. Dermicool saw strong growth. Of course it's a seasonal product, so summer has seen a great demand, but for the entire year, what kind of projections would you have in mind for some of these key products of yours?
So for the year also, we expect the same kind of a performance, and a double-digit growth we are expecting for the full financial year. And you rightly said the summer had been very good, and so it was the strongest summer in many last few years. And the uptakes have also been impacted positively for us. And there had been some impact on the discretionary and other products there on their performance. But despite this, overall we have been able to achieve almost a 10% kind of a growth on the net sales.
So, sir, when you're saying double-digit growth for the entire year, are you talking about volumes? Are you talking about the total revenue? Or are you talking about a specific product profile? Just wanted to get that clear.
It is on an overall basis, and our price growth has been relatively minimal, kind of 2%, 2 to 3% max. So that's where we would be.
Are you looking at further price hikes then? Because for now you haven't taken any. Demand is good. Would you take this opportunity to hike the prices then and maybe improve your margins from here on?
So no. So we are very judicious in terms of taking price rises. If you have seen earlier also, we had never been aggressive. We are very judicious, and wherever we feel that there is some cost escalation or there is a justification for price rise, then only we do. We are very conscious of doing a price rises.
Sure. Mr. Bhansali, just a bit more in terms of margins. Also, what I want to understand is that, currently around that 23.9, 24% is what the margins have come in this time. 24% approximately the margins are at. EBITDA margin. What is it that one should be watching out for? At one point of time, you did have those 27, 28% margins. Should we expect that to start seeing an improvement, or what is the trajectory there for margins for FY25?
Yeah, so if you compare it year on year, so the margin enhancement has happened in the current quarter as well from the previous one. So it is almost kind of 88, 90 basis points improvement in the EBITDA margin. And for the full year, we expect some EBITDA margin improvement. We would be, despite this, we would be investing very aggressively in line with the previous years, little more maybe on the advertisement and promotions. And despite this, we expect some EBITDA margin improvement.
Some EBITDA margin improvement was what one is expecting. Mr. Bhansali, two segments which have not done well. One is Kesh King, that has been under pressure for the last few quarters when you look at it. And other than that is the pain management this time. That's also seeing a decline. Trajectory for both these, do you expect, Kesh King now to start seeing a turnaround? What is the story for Kesh King as well as pain management?
Yes, for Kesh King, we are taking many initiatives in terms of marketing and also distribution both. And we expect the same to have an impact from the third quarter this year. And pain management has been mainly because of the season. So if you look at such a scorching and strong summers, while it has impacted positively on the summer products, it has had an impact on balms. But otherwise, the balms growth is very intact. We expect the same to rebound.
So I also wanted to get a sense that in Q1, I understand you've launched almost 9 new products and variants. What else is lined up in the pipeline for the rest of the year? And also give us a better sense on the rural. And I ask you that because we were conversing with the management of Dabur yesterday, and they pointed out how rural has outpaced urban to the tune of 350 basis points. And going forward, they expect this outperformance to even widen from here on. Would you concur with that view on the kind of rural outperformance that we have seen, and a word on the launches which are lined up?
So we have not many launches as we have done in the past quarter, and also going forward we would be doing many more. And so you will find not many new launches on the digital platforms as well. So newer products, premium products, and very effective kind of products we will keep on coming. We will toying with the ideas on the new channels more, while there will be some new launches on the general trade as well. And in terms of the rural growth, we feel that the green shoots are there, and so we expect the rural growth to further inch up from here. It is very difficult to say how much would it be, outpacing the urban one. But we expect that compared to the earlier periods, there would be substantial rural growth which is expected, given that the monsoon would also be normal and the government is taking many other initiatives. And so the consumption-led growth has to come from the rural.
And sir, before I let you go, the Man Company, your latest acquisition, has it scaled up versus your expectation? Because the brokerages are a bit underwhelmed by the kind of performance that we have seen of men grooming. So what's the scale-up plan? And also I wanted to get a better understanding from you with respect to what's happening to your advertisement spends, because they have jumped up quite materially, 21% surge in Q1. Is this going to be the pace of advertisement and marketing spend that you will continue doing?
So we would be investing behind the brands, and so we are not able to investing it more than what we have done in the previous year. So it may increase a bit in terms of a percentage of our overall sales and going forward. But we are we are looking at the opportunity. So if we feel that there is an opportunity to enhance the brand performance with advertisements, then we are not able to doing that, and so there we expect some increase there. But despite this, there would be gross margin enhancement of a little bit, a gross margin and as well as the EBITDA margin enhancement.
Okay. Expansion in gross and EBITDA margins despite ad spends being higher is what you were expecting. But Mr. Bhansali, thank you so much for joining in with us this afternoon on ET Now.
If you like this video, then like, share and subscribe to ET Now.